Happy November. Mike Rolowitz here, 904 Home Guide team with eXp Realty in Jacksonville Beach, and it is that time of the month where we look at the market and see what's happening. I think this is going to be shorter than most because honestly, we're basically where we were in September. Not much has changed. So our median sales price, looking at Duval, St. Johns County single family homes, $397,500. That's up 1.5% from last month, which was $395, and year over year almost 17% gain. So as we predicted, that year over year gain is starting to tick down a little bit as inventory rises, as our home affordability index continues to get squeezed with the impact of rising interest rates. More on that to follow. A couple other notable data points. Days on market, same as last month, 37 days. The number of properties that are closing over the list price, that continues to decline. So just over 13% closed above list. That's a decline of 60% versus this time last year, when we had 1 in 3, 1 in 4 properties selling above the list price. The list to sold ratio, so the percentage of what a home sells for versus what it was listed for at the time of sale, we're at 97%. That was closer to 98% last month. So pricing still is paramount in this market, and understanding, looking at the actives more than what's sold, because we're pricing right now to where the market is going, not where the market has been. Let's see, active inventory, a little over 4,000 homes. That number was 3,800 last month, so a slight increase there. Month supply of inventory is up 183% versus this time last year when we were in that multiple offer feeding frenzy. Only up 4% from last month. So it really is this sort of homeostasis that we have in the market. Everything is normalizing. Buyers are able to take a little bit more time. What's been challenging is that home affordability index, which is looking at the price of homes, the cost of borrowing. That number continues to decline. The higher that number, the more affordable homes are. So that number has slid 41% since this time last year when we were looking at interest rates probably in the mid threes. Until last week, middle of last week, before the latest inflation numbers dropped, that was 7.5. Good news on the inflation front led to good news in the 10-year Treasury bond yields. Those dropping, that translates to your interest rates on mortgages dropping. So we had some folks just last week able to lock in rates in the mid sixes versus the mid to high sevens. And with the advent of buy downs, so our preferred lender now is offering a 3-2-1 buy down. Mostly that was a builder product until recently on conventional loans and government loans. And basically what that means, your interest rate year one is 3% below the prevailing interest rate. Year two, it's 2% below. Year three, it's 1% below. And years 4 through 30, it would be at that rate. Again, the hope is those interest rates, as inflation tames, continues to come down. So really the macroeconomics are what continue to drive interest rates and are also driving our market. Supply is not increasing at a rapid pace. We do see builders a little more eager to unload some of their spec homes before the end of the year. So if you were thinking new construction, absolutely reach out to the agent you work with on our team. Some great incentives, and we've been able to negotiate above and beyond some of those terrific incentives as well. So that's the market in a nutshell. We're encouraged. Some buyers that were on the fence and on the sidelines are starting to come back into the market. As those rates trickle down a little bit, some folks are locking and taking advantage of that. And our hope is, as things continue, we're now through the midterm elections, which always brings some worry. Where inflation goes, interest rates will follow. So the hope is those continue to drop, and we continue to see some more inventory continue to come on the market to help those buyers that have been looking for quite a long time get over that buyer fatigue, get in and get a home and start building equity. That's it. Any questions? Always happy to do a deeper dive on the data and grab a coffee or a drink and discuss. Hope you have a great one. Thanks.